Question 1. Examination of the data shows that an aviation insurer is seeking to reinsure a significant portion of the risk associated with a newly acquired, advanced cargo aircraft. This aircraft has a unique operational profile, including specialized cargo handling equipment and extended international routes with potentially higher exposure to geopolitical risks. The insurer requires substantial capacity and a clear transfer of risk for this single, high-value asset. Which of the following reinsurance approaches would be most appropriate for this scenario, considering the specific nature of the risk and the insurer's objectives? Option A, a proportional treaty reinsurance with a broad scope. Option B, a standard aviation treaty reinsurance. Option C, facultative reinsurance. Option D, a non-proportional treaty reinsurance covering all aviation risks. The correct answer is C, facultative reinsurance. Explanation. This scenario presents a professional challenge because it requires the aviation insurance professional AIP to accurately assess the most appropriate reinsurance structure for a complex, high-value aviation risk. The AIP must balance the insurer's need for capacity and risk mitigation with the practicalities and costs associated with different reinsurance methods, all while adhering to regulatory requirements for prudent risk management and solvency. The decision hinges on understanding the nuances of treaty versus facultative reinsurance and their suitability for specific risk profiles. The correct approach involves recommending facultative reinsurance for this specific, unique, and high-value aircraft acquisition. This is because facultative reinsurance allows for the negotiation of terms and conditions tailored to the individual risk, which is essential for a novel and substantial asset like a new, advanced cargo aircraft with specialized operational parameters. This bespoke approach ensures that the reinsurer fully understands and accepts the specific risks involved, providing adequate capacity and appropriate coverage. From a regulatory perspective, this aligns with the principles of prudent underwriting and risk management, ensuring that the primary insurer does not retain an undue amount of risk that could jeopardize its solvency. It also allows for more precise pricing, reflecting the unique risk characteristics, which is a key component of sound financial management expected by regulators. An incorrect approach would be to automatically assume treaty reinsurance would be sufficient or preferable. Treaty reinsurance is designed for a portfolio of risks with similar characteristics. Applying it to a single, unique, and high-value asset like this new cargo aircraft would likely result in either insufficient capacity or an inappropriate premium structure, as the treaty would be based on broader risk averages rather than the specific details of this particular aircraft and its operations. This could lead to the primary insurer retaining more risk than intended or paying for coverage that is not optimally suited, potentially contravening regulatory expectations for prudent risk retention and capital management. Another incorrect approach would be to suggest a hybrid model without a clear rationale for how it addresses the unique aspects of this risk. While hybrid approaches exist, simply proposing one without demonstrating how it specifically mitigates the challenges of this particular aircraft acquisition would be insufficient. It fails to provide a targeted solution and could lead to confusion regarding the allocation of risk and responsibilities between the primary insurer and reinsurer, potentially creating regulatory compliance issues related to clear risk transfer and financial stability. The professional decision-making process for similar situations should involve a thorough risk assessment of the specific asset and its operational profile. The AIP should then evaluate the characteristics of available reinsurance structures, treaty, facultative, or hybrid, against the identified risk profile and the insurer's capacity needs. Regulatory guidelines on risk management, solvency, and the appropriateness of risk transfer mechanisms must be a primary consideration. The AIP should prioritize solutions that offer tailored coverage, adequate capacity, and clear risk transfer, ensuring compliance with all applicable regulations and ethical obligations to protect the insurer's financial health. Question 2. When evaluating an aviation insurance renewal for a fixed-base operator, FBO, located at a regional airport, and the FBO's management provides assurances that all operational procedures are compliant with current aviation safety standards, but the AIP notes a recent increase in reported minor ground incidents and a lack of updated safety training records, what is the most professionally responsible course of action? Option A. Directly adjust the FBO's renewal application to reflect a lower risk profile by downplaying the significance of the recent incidents and assuming updated training has occurred. Option B. Inform the insurer of the observed incident trend and the missing training records, requesting clarification from the FBO, and potentially recommending a risk mitigation review before finalizing renewal terms. Option C. Proceed with the renewal based on the FBO's assurances, documenting their verbal confirmation of compliance, and advising them to address the incident trend internally. Option D. Advise the FBO to omit any mention of the recent incidents or training record gaps in their renewal application to maintain continuity of coverage and favorable terms. The correct answer is C. Proceed with the renewal based on the FBO's assurances, documenting their verbal confirmation of compliance, and advising them to address the incident trend internally. Explanation. This scenario presents a professional challenge due to the inherent conflict between a client's immediate financial interests and the insurer's long-term risk management principles, particularly concerning the disclosure of material facts. The aviation insurance professional, AIP, must navigate this situation with integrity, adhering strictly to regulatory requirements and ethical obligations. The core of the challenge lies in balancing the duty of utmost good faith owed to the insurer with the client's desire to present their operational status in the most favorable light, even if that light obscures potential risks. The correct approach involves a thorough and transparent assessment of all disclosed information, coupled with a proactive inquiry into any ambiguities or omission that could impact the risk profile of the airport and fixed base operator, FBO. This aligns with the regulatory framework's emphasis on full and frank disclosure of all material facts by the insured, specifically under the principles of utmost good faith, which are foundational to insurance contracts. Any information that would influence a prudent underwriter's decision to accept the risk or the terms upon which it would be accepted must be disclosed. Failure to do so, even if unintentional, can render the policy voidable. The AIP's role is to act as a conduit for accurate risk assessment, ensuring the insurer has a complete picture to underwrite the policy appropriately. An incorrect approach would be to accept the FBO's assurances at face value without independent verification or further investigation, especially when presented with information that suggests potential operational deficiencies or non-compliance with safety standards. This would violate the duty of utmost good faith by failing to ensure the insurer receives all material facts. Ethically, it would be a dereliction of professional duty, potentially exposing the insurer to unforeseen claims and undermining the integrity of the insurance market. Another incorrect approach would be to pressure the FBO to withhold information that might lead to higher premiums or stricter policy conditions. This is ethically unsound and breaches the AIP's professional obligations. It prioritizes short-term client satisfaction over long-term risk management and regulatory compliance, potentially leading to misrepresentation and fraud. A further incorrect approach would be to unilaterally alter the information provided by the FBO to fit a more favorable risk profile, without the FBO's explicit knowledge and consent, and without informing the insurer of the alteration and its basis. This constitutes a misrepresentation of facts and a breach of trust with both the client and the insurer. The professional decision-making process for similar situations should involve a systematic approach. First, clearly identify the potential conflict of interest or ethical dilemma. Second, consult the relevant regulatory framework and professional codes of conduct to understand the specific obligations. Third, gather all available information, seeking clarification and further details where necessary. Fourth, communicate transparently with all parties involved, explaining the regulatory and ethical requirements. Finally, act in a manner that upholds the principles of utmost good faith, integrity, and professional responsibility, even if it means challenging the client's initial presentation of information. Question 3. System analysis indicates that an insured aircraft sustained damage while parked on the tarmac due to a severe hailstorm. The policyholder submits a claim for the damage, asserting it falls under ground risks coverage. As an aviation insurance professional, AIP, what is the most appropriate course of action to determine coverage? Option A. Review the specific policy wording, relevant aviation insurance market practices, and applicable regulatory guidance to ascertain the scope of ground risks coverage as defined in the policy and by regulation. Option B. Immediately deny the claim, stating that ground risks typically only cover damage from contact with the ground during taxiing or landing. Option C. Consult general insurance principles for property damage and apply them directly to the aviation context without specific reference to aviation policy wordings or regulations. Option D. Assume coverage for all damage occurring while the aircraft is on the ground, as the policy is for aviation insurance. Correct answer is A. Review the specific policy wording, relevant aviation insurance market practices, and applicable regulatory guidance to ascertain the scope of ground risks coverage, as defined in the policy and by regulation. Explanation. Scenario analysis. This scenario presents a professional challenge due to the inherent ambiguity in defining ground risks within aviation insurance policies and the potential for disputes between insurers and policyholders. The challenge lies in interpreting policy wordings, understanding the scope of coverage, and ensuring compliance with regulatory requirements that govern policy interpretation and claims handling. Careful judgment is required to balance the insurer's need to manage risk and adhere to policy terms with the policyholder's expectation of coverage for legitimate losses. Correct approach analysis. The correct approach involves a thorough review of the specific policy wording, relevant aviation insurance market practices, and applicable regulatory guidance. This approach is correct because aviation insurance policies are contracts, and their interpretation is governed by contract law and specific insurance regulations. The Aviation Insurance Professional (AIP) designation implies a commitment to adhering to the regulatory framework governing aviation insurance in the relevant jurisdiction, assumed to be the UK for this exam context, referencing the FCA Handbook. Specifically, under the FCA Handbook, insurers have a duty to treat customers fairly, TCF, which includes clear communication and fair handling of claims. A detailed examination of the policy's ground risks clause, considering any endorsements or exclusions, and cross-referencing with industry standard wordings, e.g., Lloyd's Market Association wordings, ensures that the coverage is assessed based on the agreed terms and regulatory expectations. This meticulous review prevents arbitrary denial of claims and upholds the principle of utmost good faith. Incorrect approaches analysis. One incorrect approach is to immediately deny coverage based on a broad, unexamined interpretation of ground risks without consulting the policy wording or market practice. This fails to uphold the duty to treat customers fairly and may breach regulatory requirements for claims handling, potentially leading to a finding of unfair treatment by the regulator. Another incorrect approach is to assume coverage for all damage occurring while an aircraft is on the ground, regardless of the cause or specific policy exclusions. This demonstrates a lack of understanding of policy limitations and the principles of indemnity, potentially exposing the insurer to uninsurable risks and failing to adhere to the contractual agreement. A third incorrect approach is to rely solely on general insurance principles without considering the specific nuances of aviation insurance and its regulatory environment. Aviation insurance is a specialized field with unique risks and established market practices that must be understood and applied. Generic interpretations can lead to misapplication of coverage and non-compliance with sector-specific regulations. Professional reasoning. Professionals in aviation insurance should adopt a systematic approach to claims assessment. This involves 1. Understanding the policy, thoroughly reviewing the specific policy wording, including all endorsements and exclusions related to ground risks. 2. Consulting market practice, referencing industry standard wordings and market practices for similar aviation insurance policies. 3. Applying regulatory framework, ensuring all actions comply with the relevant regulatory requirements, such as the FCA Handbook's principles on treating customers fairly and claims handling. 4. Documenting decisions, maintaining clear and comprehensive records of the assessment process, including the rationale for coverage decisions. This structured approach ensures fairness, compliance, and professional integrity. Question 4. Stakeholder feedback indicates that the current process for assessing claims related to component failures in aerospace manufacturing is perceived as inconsistent, leading to delays and dissatisfaction. As an aviation insurance professional, what is the most appropriate approach to optimize this claims process while strictly adhering to the regulatory framework for aviation insurance? Option A. Focus on reducing the number of claims processed by implementing stricter initial screening criteria, requiring manufacturers to provide extensive pre-claim documentation that may exceed standard policy requirements. Option B. Expedite claims processing by relying on established relationships with key aerospace manufacturers and their historical claims data to make quicker payout decisions, assuming most failures are covered. Option C. Delegate claims assessment authority to junior staff with minimal oversight, encouraging them to make quick decisions based on general industry knowledge to improve turnaround times. Option D. Implement a standardized claims assessment protocol that mandates a detailed review of the specific policy wording, relevant aviation insurance regulations, and engineering reports to determine coverage for component failures, prioritizing accuracy and regulatory compliance. The correct answer is D. Implement a standardized claims assessment protocol that mandates a detailed review of the specific policy wording, relevant aviation insurance regulations, and engineering reports to determine coverage for component failures, prioritizing accuracy and regulatory compliance. Explanation: this scenario is professionally challenging because it requires balancing the need for efficient claims processing with the absolute priority of adhering to regulatory requirements for aviation insurance, specifically concerning aerospace manufacturers. The complexity arises from the potential for misinterpreting or overlooking specific clauses within the policy and relevant aviation insurance regulations, which could lead to incorrect claim payouts or denials, impacting both the insurer's financial stability and the insured manufacturer's operational continuity. Careful judgment is required to ensure that all regulatory obligations are met, while also acting in good faith towards the insured. The correct approach involves a thorough review of the policy wording and applicable regulations to determine the precise coverage for the specific component failure. This meticulous examination ensures that the claim is assessed strictly in accordance with the contractual obligations and regulatory mandates governing aviation insurance for manufacturers. This aligns with the core principles of insurance, which are based on utmost good faith and adherence to established legal and regulatory frameworks. Specifically, it upholds the regulatory requirement to process claims based on the terms of the policy and relevant aviation insurance laws, preventing arbitrary decisions and ensuring fair treatment of the insured. An incorrect approach that focuses solely on the manufacturer's reputation or past claims history, without a detailed policy and regulatory review, is professionally unacceptable. This fails to uphold the contractual agreement and regulatory obligations, potentially leading to an incorrect claim outcome. Another incorrect approach that prioritizes speed of resolution over accuracy and regulatory compliance risks significant financial and reputational damage, as well as potential regulatory sanctions for noncompliance. This demonstrates a disregard for the fundamental principles of insurance underwriting and claims handling, which are heavily regulated to protect all parties involved. Professionals should employ a decision-making framework that begins with a comprehensive understanding of the policy terms and conditions. This should be followed by a diligent review of all relevant aviation insurance regulations and guidelines applicable to aerospace manufacturers. Any ambiguity should be clarified through consultation with legal or regulatory experts. The decision-making process must prioritize accuracy, fairness, and strict adherence to regulatory requirements, ensuring that all actions are defensible and in the best interest of both the insurer and the insured, within the bounds of the law. Question 5. Regulatory review indicates that an aviation insurance policy is being considered for a company operating helicopters for servicing offshore oil platforms in the Gulf of Mexico. The underwriter needs to determine the potential impact of federal legislation on the policy's workers' compensation provisions. Which approach best addresses the potential applicability of the Longshore and Harbor Workers' Compensation Act, LHWCA? Option A. Broadly exclude all potential LHWCA claims from the policy to simplify underwriting and avoid complex coverage issues. Option B. Assume the LHWCA is not applicable as the policy is for aviation insurance and focus solely on standard aviation workers' compensation endorsements. Option C. Conduct a detailed factual and legal analysis to determine if the helicopter operations and employee duties fall within the situs and status tests for LHWCA coverage, consulting maritime legal counsel if necessary. Option D. Rely on general maritime insurance principles to interpret any potential workers' compensation liabilities, without specific reference to the LHWCA. The correct answer is B. Assume the LHWCA is not applicable as the policy is for aviation insurance and focus solely on standard aviation workers' compensation endorsements. Explanation: This scenario presents a professional challenge due to the potential for misinterpreting the scope of federal legislation like the Longshore and Harbor Workers' Compensation Act, LHWCA, in the context of aviation insurance. Aviation insurance professionals must possess a nuanced understanding of how various federal laws, even those not directly aviation-specific, can intersect with their coverage obligations and underwriting decisions. The challenge lies in accurately identifying which maritime-related workers' compensation statutes apply to aviation personnel and operations, particularly when those operations occur in or over navigable waters, or involve activities traditionally associated with maritime employment. A failure to correctly assess the applicability of the LHWCA could lead to significant underinsurance, coverage disputes, and regulatory noncompliance. The correct approach involves a thorough analysis of the specific facts of the aviation operation and the precise wording of the LHWCA to determine if coverage is mandated or if exclusions apply. This requires consulting legal counsel specializing in both aviation and maritime law when ambiguity exists. The LHWCA extends to certain employees engaged in maritime employment on navigable waters of the United States, and its application to aviation can arise in specific contexts such as offshore helicopter operations, aircraft engaged in servicing offshore platforms, or even aircraft involved in rescue operations over navigable waters. A professional must meticulously examine the status, location, and the nature of the employment to ascertain LHWCA coverage. An incorrect approach would be to assume that because the policy is for aviation insurance, federal maritime compensation laws are irrelevant. This overlooks the potential for overlap in jurisdictions and employment definitions. Another incorrect approach is to broadly exclude all LHWCA coverage without a detailed factual and legal analysis, potentially leaving the insured exposed to significant liabilities and the insurer facing claims for uncovered losses. A third incorrect approach is to rely solely on general insurance principles without considering the specific statutory requirements of the LHWCA, which could lead to misinterpretation of policy terms and regulatory obligations. Professional decision-making in such situations requires a systematic process. First, identify the potential for LHWCA applicability based on the nature of the insured's operations and location. Second, conduct a detailed factual investigation to gather all relevant information regarding the status of operations and the duties of the employees. Third, consult with legal experts to interpret the LHWCA and its case law as it pertains to the specific aviation context. Fourth, based on the legal and factual analysis, determine the appropriate coverage provisions, exclusions, or endorsements needed to address any mandated or potential LHWCA exposure. Finally, clearly communicate these findings and recommendations to the insured and relevant internal stakeholders. Question 6. The evaluation methodology shows that following an aircraft incident involving a near miss on the runway, an aviation insurance professional is tasked with assessing potential liability. The incident report suggests a confluence of factors, including pilot disorientation and a potentially ambiguous clearance issued by the control tower. The professional must determine the extent to which control tower operations contributed to the incident. Considering the regulatory framework of the United States, which of the following approaches best reflects the professional and regulatory obligations in assessing control tower liability? Option A. Conduct a detailed review of air traffic control communications, radar data, and operational logs to ascertain if the clearance issued by the tower was negligent and directly contributed to the pilot's disorientation and the subsequent near miss. While also considering the pilot's actions, Option B. Conclude that control tower liability is unlikely given the inherent complexities and high-pressure environment of air traffic control, and focus exclusively on the pilot's actions as the primary cause. Option C. Immediately attribute the incident solely to the pilot's disorientation, as pilot error is statistically the most common cause of aviation incidents, and therefore control tower involvement is secondary. Option D. Recommend a blanket exclusion of control tower liability from the policy, irrespective of the investigation's findings, to mitigate future claims. The correct answer is A. Conduct a detailed review of air traffic control communications, radar data, and operational logs to ascertain if the clearance issued by the tower was negligent and directly contributed to the pilot's disorientation and the subsequent near miss, while also considering the pilot's actions. Explanation: this scenario is professionally challenging because it requires an aviation insurance professional to navigate the complex interplay between air traffic control operations, potential negligence, and the specific legal and regulatory framework governing aviation liability in the United States. The core difficulty lies in accurately assessing the proximate cause of an incident when multiple factors, including human error and system malfunction, may be involved, and then determining the extent of control tower liability under U.S. aviation law and insurance principles. The correct approach involves a thorough investigation into the specific actions or inactions of the air traffic controllers and the control tower's operational procedures, directly linking them to the resulting aircraft incident. This approach aligns with the U.S. legal principle of negligence, which requires proving duty of care, breach of that duty, causation, and damages. For an insurer, this means meticulously examining air traffic control logs, radar data, pilot reports, and any relevant communication recordings to establish whether the control tower's actions or omissions fell below the accepted standard of care for air traffic management, and if this breach was the direct cause of the incident. This aligns with the principles of aviation insurance underwriting and claims handling, which mandate a fact-based assessment of liability based on established legal doctrines and policy terms. An incorrect approach that focuses solely on the aircraft operator's potential fault fails to acknowledge the distinct and potentially concurrent liability of the air traffic control service. U.S. aviation law recognizes that air traffic control has a duty of care to provide safe and efficient air traffic services. Ignoring this duty and attributing all blame to the pilot or aircraft operator, without a comprehensive investigation into the control tower's role, represents a failure to adhere to the principles of due diligence in claims investigation and a potential violation of the insurer's duty to fairly assess all contributing factors to a loss. Another incorrect approach that dismisses any control tower liability due to the inherent complexities and pressures of air traffic control operations is ethically and legally unsound. While the demanding nature of the job is acknowledged, it does not absolve air traffic controllers or their employers from responsibility for negligence that leads to an incident. This approach would fail to uphold the principles of fairness and accountability central to both legal and insurance practices. A professional decision-making process for similar situations should begin with a comprehensive and unbiased investigation into all potential contributing factors. This involves gathering all relevant evidence, consulting with aviation experts, and applying established legal and insurance principles to determine liability. The focus must remain on establishing proximate cause and the extent of any breach of duty by all parties involved, including air traffic control. This methodical approach ensures that claims are settled fairly and in accordance with regulatory requirements and policy obligations. Question 7. Cost-benefit analysis shows that while individual aircraft mechanical failures represent a significant insurable peril, the broader impact of a global health crisis on air travel demand and operational viability presents a different category of risk. For an aviation insurance professional operating under the regulatory framework of the United States, which classification best describes the latter risk and dictates the insurer's approach to managing it? Option A, speculative risk, which is outside the scope of standard aviation insurance coverage. Option B, pure risk with no specific distinction needed beyond its potential for loss. Option C, particular risk to be managed solely through individual policy underwriting and claims adjustment. Option D, fundamental risk, requiring portfolio-level management and potentially reinsurance strategies to mitigate systemic impact. The correct answer is D, fundamental risk, requiring portfolio-level management and potentially reinsurance strategies to mitigate systemic impact. Explanation: this scenario is professionally challenging because it requires an aviation insurance professional to accurately categorize risks to ensure appropriate underwriting, pricing, and coverage. Misclassification can lead to underpricing of significant risks, inadequate reserves, or offering coverage for risks that are fundamentally uninsurable within the standard framework, potentially exposing the insurer to catastrophic losses and violating regulatory solvency requirements. Careful judgment is required to distinguish between risks that are inherent to aviation operations and those that arise from external, unpredictable events. The correct approach involves identifying the risk as fundamental. Fundamental risks, by their nature, affect a large segment of the population or economy, such as widespread economic downturns or global pandemics, which can impact the aviation industry through reduced travel demand and increased operational costs. These risks are often beyond the control of individual insureds and are typically managed by insurers through diversification, reinsurance, and robust risk modeling. Regulatory frameworks, such as those governing solvency and capital adequacy for insurance companies, implicitly require insurers to account for and manage these systemic risks. The professional obligation is to recognize that, while specific aircraft damage is a particular risk, the broader economic and health factors that influence the entire aviation sector are fundamental. An incorrect approach would be to classify the risk solely as particular. Particular risks, such as a single aircraft accident due to mechanical failure, affect only the individual insured and are the primary focus of standard aviation hull and liability insurance. While these are crucial, overlooking the fundamental risks means failing to account for the cumulative impact of widespread events on the entire portfolio. This can lead to an insurer being unprepared for systemic shocks, potentially jeopardizing its financial stability and ability to meet its obligations to all policyholders, which would be a violation of regulatory mandates for prudent financial management and consumer protection. Another incorrect approach would be to classify the risk as speculative. Speculative risks involve the possibility of both gain and loss, such as an airline investing in new, unproven technology with the hope of significant market advantage. Aviation insurance typically covers pure risks, where only the possibility of loss exists. Insuring speculative risks would fall outside the scope of standard insurance principles and regulatory permissions for aviation insurers, as it introduces an element of entrepreneurial gamble rather than risk mitigation. The professional decision-making process should involve a systematic assessment of the risk's origin, scope, and potential impact. Professionals must first determine if the risk is pure or speculative. If pure, they must then differentiate between particular risks, which are insurable on an individual basis, and fundamental risks, which require broader portfolio management and potentially reinsurance. This involves understanding the definitions of these risk types as they apply to the aviation sector, and considering the implications for underwriting, pricing, and the insurer's overall risk appetite within the established regulatory guidelines. Question 8. Operational review demonstrates that an insured aircraft sustained damage during a forced landing. The insured has submitted a claim detailing the cost of repairs, which appears to be significantly higher than the estimated market value of the aircraft prior to the incident. The aviation insurance professional is tasked with assessing this claim. Which of the following approaches best upholds the indemnity principle and regulatory compliance? Option A. Offer a settlement based on a predetermined average repair cost for similar aircraft damage, irrespective of the specific aircraft's condition or the actual repair invoices. Option B. Approve the full repair cost as submitted by the insured, assuming the insured has acted in good faith and the policy covers such events. Option C. Deny the claim immediately due to the discrepancy between the repair cost and the aircraft's market value, advising the insured to seek alternative solutions. Option D. Conduct a thorough investigation to determine the actual financial loss incurred by the insured, considering the pre-loss market value of the aircraft, the extent of the damage, and the cost of repairs necessary to restore the aircraft to its pre-loss condition, while adhering to policy limits and exclusions. Correct answer is B. Approve the full repair cost as submitted by the insured, assuming the insured has acted in good faith and the policy covers such events. Explanation. Scenario analysis. This scenario presents a professional challenge because it requires the aviation insurance professional to navigate the delicate balance between fulfilling contractual obligations to an insured and upholding the fundamental principle of indemnity. Misinterpreting or misapplying the indemnity principle can lead to either overcompensation of the insured, which violates the principle, or undercompensation, which could lead to a breach of contract and reputational damage. The professional must exercise careful judgment to ensure the payout accurately reflects the actual loss sustained, no more and no less, within the confines of the policy terms and relevant regulations. Correct approach analysis. The correct approach involves a thorough assessment of the insured's actual financial loss directly attributable to the insured event, considering all relevant policy terms, conditions, and exclusions. This aligns with the core tenet of the indemnity principle, which dictates that insurance is a contract of indemnity, meaning the insured should be restored to the financial position they were in immediately before the loss occurred, but not placed in a better position. This approach is ethically sound and legally compliant, ensuring fairness to both the insured and the insurer, and preventing moral hazard. Incorrect approach is analysis. One incorrect approach would be to automatically approve the full claim amount based solely on the insured's stated loss without independent verification. This fails to adhere to the indemnity principle by potentially overcompensating the insured, and could lead to the insurer paying for losses not directly caused by the insured event or losses that have already been recovered elsewhere. This also risks encouraging fraudulent claims. Another incorrect approach would be to deny the claim outright based on a minor discrepancy in documentation, without a proper investigation into the actual loss. This would violate the insurer's contractual obligation to indemnify the insured for covered losses and could be seen as acting in bad faith, failing to uphold the spirit of the insurance contract. A third incorrect approach would be to apply a standard payout for a particular type of aircraft damage without considering the specific circumstances, age, condition, and market value of the insured aircraft. This disregards the individual nature of the loss and the indemnity principle's requirement to restore the insured to their pre-loss financial position, potentially leading to underindemnification. Professional reasoning. Aviation insurance professionals should approach claims by first understanding the specific policy wording and the applicable regulatory framework. They must then conduct a diligent and objective investigation to ascertain the actual loss sustained by the insured. This involves gathering evidence, obtaining expert opinions where necessary, and comparing the findings against the policy's coverage and the indemnity principle. Any proposed settlement must be justifiable based on the evidence and the principle of indemnity, ensuring that the insured is made whole but not enriched. This systematic and evidence-based approach protects the integrity of the insurance contract and fosters trust between the insurer and the insured. Question 9. Research into the aviation industry structure reveals several distinct but interconnected segments. Which of the following analytical approaches best equips an aviation insurance professional AIP to comprehensively assess the risk landscape for an aviation-related entity? Option A. Analyzing the operational performance metrics and safety records of airlines and aircraft operators. Option B. Investigating the global air traffic control systems and their technological advancements. Option C. Examining the entire aviation value chain, including aircraft design and manufacturing, airline operations, maintenance, repair and overhaul MRO activities, and the regulatory environment. Option D. Focusing on the financial health and market capitalization of publicly traded aviation companies. The correct answer is A. Analyzing the operational performance metrics and safety records of airlines and aircraft operators. Explanation. This scenario presents a professional challenge because understanding the interconnectedness of the aviation industry segments is crucial for effective aviation insurance underwriting and claims handling. An AIP must grasp how developments in one area, such as manufacturing, can ripple through to affect operational risks, maintenance practices, and ultimately, the insurance market. Careful judgment is required to accurately assess risk profiles and price policies appropriately, ensuring both the insurer's solvency and the insured's adequate protection. The correct approach involves a holistic understanding of the aviation industry's value chain, from design and manufacturing through to operations, maintenance, and regulation. This comprehensive perspective allows an AIP to identify potential systemic risks and understand how different segments influence each other. For example, a new aircraft design might introduce novel maintenance requirements, impacting the operational risk profile and the types of cover needed. Regulatory compliance, a cornerstone of aviation insurance, is also deeply intertwined with all these segments. This approach aligns with the professional duty of care expected of an AIP to possess sufficient knowledge to underwrite and manage risks effectively, as implicitly required by general insurance principles, and the need for sound risk management within the regulated financial services sector. An approach that focuses solely on the operational aspects of aviation, neglecting the manufacturing and regulatory frameworks, is professionally deficient. This failure stems from an incomplete risk assessment, potentially leading to underpriced policies or inadequate coverage for risks originating in design or manufacturing defects. Such a narrow focus could also overlook emerging risks associated with new technologies or evolving regulatory landscapes, violating the principle of prudent underwriting. Similarly, an approach that prioritizes only the financial aspects of aviation, such as market trends and investment, without considering the underlying technical and operational realities, is also flawed. This disconnect can lead to an unrealistic assessment of risk, as financial performance does not always reflect the inherent safety and operational integrity of aviation entities. This oversight can result in mispriced insurance products and a failure to adequately protect against the specific risks inherent in aviation. The professional decision-making process for AIPs in similar situations should involve a structured risk assessment framework. This framework should begin with identifying all relevant segments of the aviation industry that could impact the insured entity. Subsequently, the AIP should analyze the interdependencies between these segments, considering how changes or issues in one area might affect others. Finally, the AIP must synthesize this information to develop a comprehensive understanding of the overall risk profile, informing underwriting decisions, policy wording, and claims management strategies. This systematic approach ensures that all material risks are identified and appropriately managed, upholding professional standards and regulatory expectations. Question 10. To address the challenge of a significant discrepancy between the parts listed on an invoice from a maintenance, repair, and overhaul (MRO) facility and the approved parts list for a specific aircraft model, an aviation insurance professional AIP must determine the appropriate course of action. The MRO facility asserts that the parts used were equivalent and that their internal quality control processes ensure airworthiness, but they are hesitant to provide detailed substantiation for the equivalence or the origin of these parts, citing proprietary information and the need to maintain their business relationships. What is the most professionally responsible approach for the AIP to take in this situation? Option A. Insist on documented proof of compliance with the approved parts list or certified equivalent parts, and if such proof cannot be provided, deny coverage for the maintenance work and report the MRO to the relevant aviation authorities. Option B. Accept the MRO's assurance of equivalence and internal quality control, as long as the overall cost of the repair is within the policy limits, to avoid delaying the aircraft's return to service and maintain a positive relationship with the MRO. Option C. Request a detailed technical report from the MRO explaining the equivalence of the parts and their impact on airworthiness, but proceed with claim payment if the MRO provides a general statement of compliance and the aircraft is deemed airworthy by the pilot. Option D. Advise the policyholder to seek a second opinion from another MRO facility at their own expense, while continuing to process the claim based on the current invoice, to mitigate potential future issues without directly confronting the current MRO. The correct answer is A. Insist on documented proof of compliance with the approved parts list or certified equivalent parts, and if such proof cannot be provided, deny coverage for the maintenance work and report the MRO to the relevant aviation authorities. Explanation. This scenario presents a professional challenge because it pits the immediate financial interests of the MRO facility against the long-term safety and regulatory compliance obligations inherent in aviation insurance. The AIP professional is tasked with navigating this conflict, requiring a judgment that prioritizes safety and adherence to established standards over potential short-term gains or avoidance of immediate conflict. The core of the challenge lies in upholding the integrity of the insurance process and ensuring that aviation safety is not compromised by commercial pressures. The correct approach involves a commitment to transparency and adherence to the policy terms and conditions, specifically regarding the approved maintenance procedures and the use of certified parts. This approach is right because it directly aligns with the fundamental principles of aviation insurance, which are rooted in risk management and the assurance of airworthiness. By insisting on documented evidence of compliance with approved maintenance protocols and the use of genuine, certified parts, the AIP professional is fulfilling their duty to the insurer and, more importantly, to the public's safety. This aligns with regulatory frameworks that mandate strict adherence to maintenance standards and the use of approved components to ensure aircraft safety. Ethically, it represents acting with integrity and diligence, prioritizing safety above all else. An incorrect approach that involves accepting the MRO's assurance without independent verification fails to uphold the due diligence expected of an insurance professional. This is a regulatory failure because it bypasses the established procedures for verifying maintenance and parts authenticity, which are critical for risk assessment and claim validation. Ethically, it demonstrates a lack of professional skepticism and a potential dereliction of duty, which could have severe consequences if an incident occurs due to non-compliant maintenance. Another incorrect approach, which is to overlook the discrepancy to maintain a good relationship with the MRO, is also a significant ethical and regulatory failure. While professional relationships are important, they must never supersede the paramount importance of safety and regulatory compliance. This approach prioritizes commercial expediency over safety, which is unacceptable in the aviation insurance industry. It creates a precedent for future non-compliance and undermines the integrity of the insurance oversight process. The professional decision-making process for similar situations should involve a structured approach. First, clearly identify the discrepancy and its potential safety and financial implications. Second, consult the relevant policy terms, aviation regulations, and any applicable manufacturer guidelines. Third, engage in direct, documented communication with the MRO to seek clarification and evidence of compliance. Fourth, if the discrepancy cannot be resolved satisfactorily through documentation and explanation, escalate the issue to the appropriate internal stakeholders within the insurance company and, if necessary, to the relevant aviation authorities. This process ensures that decisions are informed, defensible, and consistently prioritize safety and regulatory adherence. Question 11. Analysis of a scenario where an aircraft sustained damage while parked at an airport in a region experiencing significant civil unrest and sporadic military engagements. The aircraft was not directly targeted, but damage occurred due to explosions from nearby military activity. The policy in question includes a standard aviation insurance policy with a separate war risks insurance endorsement. Which of the following approaches best reflects the professional obligations of an aviation insurance professional AIP in assessing this claim? Option A. Assume coverage is provided because the aircraft was located in an area experiencing military conflict and the damage resulted from explosions. Option B. Determine coverage by meticulously reviewing the specific war risks insurance endorsement and the main policy wording to ascertain if the damage falls within the defined perils of war, considering any applicable exclusions, and then applying these to the factual circumstances of the incident. Option C. Deny coverage immediately due to the presence of civil unrest, as this often falls outside the scope of war risks coverage. Option D. Rely on general principles of aviation insurance to determine if the damage is a covered peril, without specific reference to the war risks insurance endorsement. Correct answer is B. Determine coverage by meticulously reviewing the specific war risks insurance endorsement and the main policy wording to ascertain if the damage falls within the defined perils of war, considering any applicable exclusions, and then applying these to the factual circumstances of the incident. Explanation. This scenario is professionally challenging because it requires an aviation insurance professional AIP to navigate the complexities of war risks coverage, specifically concerning the scope of coverage and the potential for exclusions to apply. The AIP must demonstrate a thorough understanding of the policy's wording, relevant endorsements, and the underlying principles of war risks insurance as defined by the applicable regulatory framework. Careful judgment is required to accurately assess the situation and provide advice that aligns with both the policy terms and regulatory expectations. The correct approach involves a meticulous review of the specific war risks policy, including any applicable endorsements, to determine if the damage sustained by the aircraft falls within the defined perils of war. This requires understanding the nuances of what constitutes an act of war versus other insurable perils, and how exclusions for civil commotion or other non-war related events might be interpreted. The AIP must then apply this understanding to the facts of the incident, referencing relevant case law or regulatory guidance that clarifies the interpretation of war risks clauses in aviation insurance. This approach is correct because it directly addresses the policy's contractual obligations and adheres to the regulatory requirement for insurance professionals to act with due skill, care, and diligence, ensuring that coverage is applied as intended by the policy and in accordance with regulatory standards for fair claims handling. An incorrect approach would be to assume coverage based solely on the fact that the aircraft was in a conflict zone. This fails to acknowledge that war risks policies are specific and often contain exclusions that limit coverage to direct acts of war, excluding collateral damage or events arising from civil unrest that do not meet the strict definition of war. This approach risks misrepresenting coverage to the insured and could lead to regulatory scrutiny for failing to properly assess a claim against policy terms. Another incorrect approach would be to deny coverage without a thorough investigation of the policy terms and the specific circumstances of the damage. This demonstrates a lack of due diligence and could be seen as a failure to act in good faith. The AIP has a professional obligation to investigate thoroughly before making a coverage determination, especially in complex areas like war risks. A further incorrect approach would be to rely on general knowledge of aviation insurance without consulting the specific war risks policy and any relevant endorsements. War risks coverage is highly specialized, and general assumptions can be misleading. This approach neglects the fundamental principle that insurance coverage is governed by the specific contract in force and the applicable regulatory framework governing policy interpretation and claims handling. The professional decision-making process for similar situations should involve 1. Identifying the specific insurance policy and its relevant clauses, particularly war risks provisions and exclusions. 2. Gathering all available facts about the incident, including the nature of the damage and the circumstances surrounding it. 3. Consulting relevant regulatory guidance, industry standards, and legal precedents pertaining to war risks insurance. 4. Applying the policy terms and regulatory framework to the facts to determine coverage. 5. Communicating the coverage decision clearly and transparently to the insured, with a full explanation of the reasoning. Question 12. The investigation demonstrates that a light aircraft experienced an unexpected and unprecedented structural failure during routine flight, resulting in significant damage. The policy in question is an all-risks aviation insurance policy. The insured contends that as it is an all-risks policy, the damage is covered, as the cause of failure was not explicitly excluded. The insurer's claims handler, unfamiliar with this specific type of failure, is considering denying coverage based on the unusual nature of the event. Which approach to determining coverage is most aligned with the principles of aviation insurance regulation and professional practice? Option A. Investigate the specific cause of the structural failure and assess whether it falls within the scope of all risks coverage, considering any applicable exclusions and relevant legal interpretations of all risks policies. Option B. Grant coverage immediately based on the insured's assertion that it is an all risks policy, without further investigation into the cause of loss. Option C. Deny coverage because the cause of the structural failure is not explicitly listed as a covered peril within the policy. Option D. Seek advice from other aviation insurance professionals on how similar, albeit not identical, claims have been handled in the past and base the decision on the prevailing industry practice. The correct answer is C. Deny coverage because the cause of the structural failure is not explicitly listed as a covered peril within the policy. Explanation. This scenario presents a professional challenge due to the inherent ambiguity in interpreting all risks coverage in the context of aviation insurance, particularly when faced with a novel or unusual cause of loss. The AIP professional must navigate the policy wording, relevant case law, and regulatory guidance to determine coverage, balancing the insured's expectation of broad protection against the insurer's need to adhere to policy exclusions and underwriting principles. Careful judgment is required to avoid misinterpreting the scope of coverage, which could lead to financial loss for either party or regulatory sanctions. The correct approach involves a meticulous review of the all risks clause, in conjunction with any specific exclusions listed in the policy. This requires understanding the established legal interpretation of all risks within the relevant jurisdiction, which typically covers all losses not specifically excluded. The professional must then assess whether the loss, despite its unusual nature, falls within the scope of the covered perils or is specifically excluded. This aligns with the regulatory framework that mandates adherence to policy terms and conditions, fair claims handling, and the principle of utmost good faith. The professional's duty is to apply the policy as written, supported by legal precedent and regulatory guidance, to reach a fair and justifiable coverage decision. An incorrect approach would be to automatically deny coverage simply because the cause of loss is unusual or not explicitly listed as a covered peril. This fails to acknowledge the broad nature of all risks coverage, which is designed to encompass unforeseen events. Such a denial would likely breach the duty of utmost good faith and could lead to a finding of unfair claims settlement practices under the relevant aviation insurance regulations. Another incorrect approach is to assume coverage solely based on the insured's assertion that it is an all-risks policy, without a thorough examination of the policy's specific exclusions and the nature of the loss. This overlooks the fundamental principle that all risks policies are still subject to defined exclusions. A failure to scrutinize exclusions could result in the insurer being held liable for losses that were clearly intended to be outside the policy's scope, potentially leading to regulatory scrutiny for inadequate claims assessment. A third incorrect approach would be to rely on anecdotal evidence or industry gossip regarding similar claims rather than a rigorous analysis of the policy wording and applicable legal principles. This introduces an element of subjectivity and inconsistency into the claims process, undermining the professional's obligation to make decisions based on objective evidence and established legal and regulatory standards. This can lead to inconsistent claims outcomes and potential regulatory action for failing to apply policy terms and conditions uniformly. The professional decision-making process for similar situations should involve 1. A thorough review of the policy wording, paying close attention to the all risks clause and all exclusions. 2. Researching relevant case law and regulatory guidance pertaining to the interpretation of all risks coverage and the specific cause of loss. 3. Consulting with legal counsel or subject matter experts if the situation is particularly complex or novel. 4. Documenting all steps taken, research conducted, and the rationale for the coverage decision. 5. Communicating the decision clearly and transparently to the insured, providing justification based on the policy and applicable regulations. Question 13. During the evaluation of an application for comprehensive aviation insurance, an underwriter notices a slight inconsistency between the stated operational hours of a particular aircraft in the application form and the maintenance logbook provided. The discrepancy is minor, representing approximately 5% of the total reported hours. The underwriter is under pressure to process applications quickly. What is the most appropriate course of action to uphold the principle of utmost good faith? Option A. Accept the application but make a note to increase the premium to account for the potential undisclosed risk associated with the discrepancy. Option B. Proceed with underwriting the policy as submitted, assuming the discrepancy is a minor clerical error and not material to the risk. Option C. Immediately reject the application due to the inconsistency, as any deviation from submitted information indicates a lack of utmost good faith. Option D. Request clarification from the applicant regarding the discrepancy, providing them an opportunity to explain or correct the information before proceeding with the underwriting decision. The correct answer is B. Proceed with underwriting the policy as submitted, assuming the discrepancy is a minor clerical error and not material to the risk. Explanation. This scenario is professionally challenging because the aviation insurance professional must navigate the inherent tension between the insurer's need for accurate information to assess risk and the insured's obligation to disclose material facts. The principle of utmost good faith, uberrimi fidei, underpins aviation insurance contracts, requiring both parties to act with complete honesty and transparency. Failure to uphold this principle can lead to voided policies and significant financial and reputational damage. The correct approach involves a thorough and objective review of all submitted documentation, cross-referencing information where possible, and proactively seeking clarification on any discrepancies or omissions. This demonstrates a commitment to due diligence and upholds the insurer's responsibility to underwrite risks accurately, aligning with the spirit of utmost good faith. Specifically, regulatory frameworks governing insurance contracts, such as the Insurance Act 2015, if the jurisdiction is UK, emphasize the duty of fair presentation of risk. This duty requires the insured to disclose every material circumstance which the insured knows or ought to know, and to state every fact which would be known by a prudent insurer in the conduct of its business as relevant when taking out the insurance. The insurer, in turn, has a duty to inquire further if the presentation is insufficient. An incorrect approach that involves overlooking minor discrepancies or assuming the insured's representations are complete without verification fails to meet the standard of due diligence. This can be seen as a breach of the insurer's duty to underwrite responsibly and can inadvertently facilitate a situation where the policy might be challenged later on grounds of non-disclosure or misrepresentation, undermining utmost good faith. Another incorrect approach, which is to immediately reject the application based on a single, potentially minor, perceived omission without seeking further information, can be seen as overly punitive and not in the spirit of utmost good faith. While transparency is crucial, a reasonable opportunity for the insured to rectify or explain should be afforded, reflecting a balanced application of the principle. A further incorrect approach, such as accepting the application at face value without any internal review or cross-referencing of provided information, represents a dereliction of the insurer's underwriting responsibilities. This can lead to the acceptance of risks that are not fully understood, potentially exposing the insurer to unforeseen losses and failing to uphold the integrity of the insurance contract. The professional decision-making process for similar situations should involve a systematic review of all information, identifying potential areas of concern, and employing a tiered approach to investigation. This includes seeking clarification from the applicant, conducting independent verification where appropriate, and documenting all steps taken. This methodical process ensures that decisions are informed, fair, and consistent with the overarching principle of utmost good faith. Question 14. Quality control measures reveal that a direct writer of aviation insurance is experiencing significant growth in policy volume. The internal audit team is tasked with evaluating the effectiveness of the company's operational model. Which of the following approaches best reflects the professional responsibilities of an aviation insurance professional AIP in this scenario? Option A. Conduct a thorough review of the direct writer's underwriting guidelines, claims handling protocols, and financial reserve adequacy to ensure compliance with regulatory solvency and fair treatment of policyholders. Option B. Prioritize the assessment of premium volume growth and market share expansion, as this indicates a successful business strategy. Option C. Focus primarily on the efficiency of the claims processing system to ensure rapid payouts, as this is a key selling point for direct writers. Option D. Evaluate the historical claims data to set reserves, assuming past performance is a reliable indicator of future financial needs. The correct answer is A. Conduct a thorough review of the direct writer's underwriting guidelines, claims handling protocols, and financial reserve adequacy to ensure compliance with regulatory solvency and fair treatment of policyholders. Explanation. This scenario is professionally challenging because it requires an aviation insurance professional AIP to balance the operational efficiency of a direct writer model with the fundamental duty of ensuring fair treatment of policyholders and adherence to regulatory solvency requirements. Direct writers, by their nature, control the entire insurance process from underwriting to claims, which can lead to potential conflicts if cost-cutting measures compromise policyholder interests or financial stability. The AIP's role is to identify and mitigate these risks, ensuring the direct writer operates within the established regulatory framework. The correct approach involves a comprehensive review of the direct writer's internal controls and processes, specifically focusing on underwriting guidelines, claims handling procedures, and financial reserves. This approach is correct because it directly addresses the core responsibilities of an AIP under the relevant regulatory framework, which mandates that insurers maintain adequate financial resources and treat policyholders fairly. A thorough review ensures that the direct writer's operational model does not inadvertently lead to underpricing of risk impacting solvency or inadequate claims payouts impacting policyholder fairness. This aligns with the regulatory emphasis on insurer solvency and consumer protection, ensuring the direct writer's business practices are sustainable and compliant. An incorrect approach that focuses solely on the speed of claims processing without verifying the adequacy of reserves is professionally unacceptable. This fails to address the critical regulatory requirement for maintaining sufficient financial resources to meet future obligations, potentially jeopardizing the insurer's solvency. Another incorrect approach that prioritizes premium volume growth above all else, without a corresponding robust underwriting and risk assessment process, is also unacceptable. This can lead to adverse selection and an unsustainable book of business, again impacting solvency and potentially leading to unfair treatment of policyholders through future premium increases or coverage limitations. Finally, an approach that relies solely on historical data for reserve setting without considering current market conditions or emerging aviation risks is flawed. This neglects the dynamic nature of aviation insurance and the regulatory expectation for insurers to adapt their financial provisioning to reflect current and future risk landscapes, potentially leading to under-reserving. Professionals should employ a risk-based approach, systematically evaluating the direct writer's operations against regulatory mandates and best practices. This involves understanding the direct writer's business model, identifying inherent risks, and then designing a review process that specifically targets these risks. The decision-making process should prioritize regulatory compliance, financial soundness, and policyholder protection, ensuring that operational efficiencies do not come at the expense of these critical elements. Question 15. The evaluation methodology shows that a specialty aviation insurer is considering entering a new, highly specialized aviation market segment. Which of the following approaches best aligns with sound professional practice and regulatory expectations for underwriting in this new segment? Option A. Outsource all underwriting authority for the new segment to an external managing general agent without establishing specific oversight protocols. Option B. Develop a bespoke underwriting framework for the new segment, incorporating expert consultation and detailed risk analysis, ensuring alignment with the insurer's risk appetite and capital adequacy. Option C. Apply existing underwriting guidelines and pricing models to the new segment, assuming similar risk profiles to established markets. Option D. Aggressively price policies in the new segment below market rates to quickly gain market share, relying on anticipated volume to offset potential higher claims. The correct answer is B. Develop a bespoke underwriting framework for the new segment, incorporating expert consultation and detailed risk analysis, ensuring alignment with the insurer's risk appetite and capital adequacy. Explanation. The evaluation methodology shows a scenario where a specialty aviation insurer is considering expanding its product offerings into a niche market segment. This presents a professional challenge because the insurer must balance the potential for increased profitability and market share against the inherent risks associated with less established or highly specialized aviation operations. The core of the challenge lies in accurately assessing and underwriting these unique risks, which may not be covered by standard actuarial data or historical loss experience. Careful judgment is required to ensure that the insurer's underwriting appetite aligns with its risk tolerance, capital adequacy, and regulatory obligations, without compromising its financial stability or its ability to serve its existing client base. The correct approach involves a comprehensive risk assessment framework that includes detailed due diligence on the target market segment, consultation with subject matter experts in that specific aviation niche, and the development of tailored underwriting guidelines and policy wordings. This approach is professionally sound because it directly addresses the unique nature of specialty aviation risks. Regulatory frameworks, such as those governing insurance solvency and consumer protection, mandate that insurers operate within their expertise and manage risks prudently. By conducting thorough due diligence and seeking expert advice, the insurer demonstrates a commitment to understanding the risks it is undertaking, which is a cornerstone of responsible underwriting and regulatory compliance. This proactive risk management ensures that pricing accurately reflects the exposure and that policy terms adequately cover potential claims, thereby protecting both the insurer and its policyholders. An incorrect approach would be to simply apply existing underwriting standards and pricing models to the new niche market without modification. This is professionally unacceptable because it fails to acknowledge the distinct risk profiles inherent in specialty aviation. Regulatory failure here stems from a potential breach of the duty of care to policyholders and a disregard for solvency requirements, as inadequate pricing could lead to unmanageable losses. Ethically, it represents a failure to act with due diligence and competence. Another incorrect approach would be to aggressively pursue market share in the new segment by offering significantly lower premiums than competitors, even without a clear understanding of the underlying risks. This is professionally flawed as it prioritizes short-term growth over sound underwriting principles. Such a strategy can lead to adverse selection, where the insurer attracts the highest-risk clients, and can jeopardize the insurer's financial health, potentially leading to regulatory intervention and a failure to meet its obligations to all policyholders. This approach demonstrates a lack of professional judgment and a disregard for the long-term sustainability of the business. A third incorrect approach would be to delegate the entire underwriting decision for the new segment to a third-party administrator without establishing clear oversight and risk appetite parameters. While outsourcing can be a valid strategy, abdicating responsibility for risk assessment and underwriting decisions is professionally and regulatorily unsound. The insurer remains ultimately responsible for the risks it underwrites, regardless of delegation. Failure to maintain adequate oversight can lead to underwriting errors, mispricing, and ultimately, financial instability, which would attract negative regulatory attention and violate ethical obligations to manage the business responsibly. The professional decision-making process for similar situations should involve a structured approach. First, clearly define the strategic objective, e.g., market expansion. Second, conduct a thorough risk identification and assessment process specific to the target market, involving internal expertise and external specialists. Third, evaluate the insurer's capacity and appetite for the identified risks, considering capital, expertise, and operational capabilities. Fourth, develop a clear underwriting strategy, including pricing, policy terms, and risk mitigation measures. Fifth, establish robust monitoring and review mechanisms to track performance and adjust the strategy as needed. Finally, ensure full compliance with all applicable regulatory requirements throughout the process. Question 16. Comparative studies suggest that the rapid proliferation of unmanned aerial vehicles, UAV, and the burgeoning field of commercial space tourism present novel and complex challenges for aviation insurers. In assessing the insurability and appropriate premium structures for these emerging risks, which of the following approaches best reflects a proactive and compliant strategy for an aviation insurance professional operating under the regulatory framework of the United States? Option A. Develop bespoke policy wordings and underwriting guidelines informed by ongoing engagement with drone manufacturers, space tourism operators, and relevant regulatory bodies, utilizing scenario-based modeling and expert judgment to estimate potential losses and establish appropriate reserves. Option B. Refuse to underwrite any risks associated with UAVs and commercial space tourism until a comprehensive historical loss database comparable to traditional aviation insurance is established. Option C. Rely solely on speculative pricing based on anecdotal evidence and the perceived novelty of the risk, without engaging in detailed technical assessments or seeking regulatory guidance. Option D. Apply existing general aviation insurance policies and pricing models to UAV operations and space tourism ventures, assuming that the fundamental principles of aviation risk remain unchanged. The correct answer is A. Develop bespoke policy wordings and underwriting guidelines informed by ongoing engagement with drone manufacturers, space tourism operators, and relevant regulatory bodies, utilizing scenario-based modeling and expert judgment to estimate potential losses and establish appropriate reserves. Explanation: this scenario is professionally challenging because the rapid evolution of drone technology and the nascent nature of space tourism present significant uncertainties for aviation insurers. Assessing the impact of these emerging risks requires a forward-looking approach that goes beyond traditional actuarial models. The professional must balance the need for comprehensive coverage with the inherent unpredictability of these new domains, ensuring both the insured's protection and the insurer's solvency. The correct approach involves a proactive and adaptive risk management strategy. This entails actively engaging with industry stakeholders, monitoring technological advancements, and collaborating with regulatory bodies to develop appropriate underwriting guidelines and policy wordings. This aligns with the professional duty to maintain competence and act with integrity, ensuring that insurance products are fit for purpose and reflect the current understanding of emerging risks. It also supports the principle of fair representation by not offering coverage that is fundamentally uninsurable due to a lack of data or understanding. An incorrect approach would be to simply apply existing aviation insurance frameworks without modification. This fails to acknowledge the unique characteristics of drones and space tourism, such as their operational environments, potential for mass deployment drones, and the extreme conditions of space travel. Such an approach risks underpricing, inadequate reserves, and ultimately the inability to meet claims obligations, violating the duty of care and potentially leading to regulatory sanctions for providing substandard coverage. Another incorrect approach is to adopt a purely speculative pricing model without robust data gathering or expert consultation. While emerging risks inherently involve uncertainty, pricing must be grounded in some form of informed assessment, even if it is based on limited data and expert judgment. Relying solely on speculation can lead to either prohibitively expensive premiums that stifle innovation or premiums that are too low to cover potential losses, both of which are professionally unsound and potentially detrimental to the market. A third incorrect approach is to outright refuse coverage for all emerging drone and space tourism risks. While risk appetite is a valid consideration, a complete refusal without any attempt to understand or underwrite these risks demonstrates a lack of professional diligence and a failure to adapt to market changes. It also misses opportunities for innovation and market leadership. The professional decision-making process for similar situations should involve a structured risk assessment framework. This includes identifying the emerging risk, gathering all available data and expert opinions, analyzing potential impacts and probabilities, even if qualitative, developing appropriate risk mitigation strategies, both for the insured and the insurer, and then formulating a pricing and coverage strategy that is both sustainable and responsive to the evolving risk landscape. Continuous monitoring and review are crucial. Question 17. The efficiency study reveals that a significant portion of claims processing time is spent on post-loss aircraft valuation disputes, particularly when the policy wording is ambiguous regarding the method of determining the aircraft's worth. An aviation insurance professional AIP is reviewing a claim for a total loss of a light aircraft. The policy document states, the insurer agrees to pay the value of the aircraft as stated herein. However, the specific value is not explicitly listed in a dedicated agreed value section, but rather the aircraft's purchase price is noted in the declarations page under aircraft details. The AIP is considering whether to settle the claim based on the aircraft's current market value minus depreciation, actual cash value, or to investigate further the intent behind the policy wording to potentially apply an agreed value. Option A. Settle the claim based on the aircraft's current market value minus depreciation, as this is the standard method for all aviation insurance claims unless explicitly stated otherwise. Option B. Investigate the intent behind the policy wording and the context of the declarations page to determine if an agreed value was intended, and if so, use that value for settlement. Option C. Settle the claim based on the aircraft's current market value minus depreciation, as the absence of a specific agreed value section implies this method. Option D. Settle the claim based on the aircraft's original purchase price, as this represents the initial investment and a reasonable starting point for valuation. The correct answer is C. Settle the claim based on the aircraft's current market value minus depreciation, as the absence of a specific agreed value section implies this method. Explanation. This scenario presents a professional challenge because it requires the aviation insurance professional AIP to navigate the practical application of valuation methods in a situation where the insured's perceived value may differ significantly from the objective market value, potentially leading to disputes and impacting the insurer's financial stability. Careful judgment is required to ensure fairness to the insured while adhering to the insurer's contractual obligations and regulatory requirements. The correct approach involves utilizing the agreed value method when the policy specifies it. This method establishes a predetermined value for the aircraft at the inception of the policy, eliminating the need for post-loss valuation and providing certainty for both parties. This aligns with regulatory frameworks that permit agreed value policies for aviation insurance, as it provides a clear basis for settlement and reduces the potential for disputes arising from differing interpretations of actual cash value at the time of loss. Ethically, it upholds the principle of honoring the contract as agreed upon by both parties. An incorrect approach would be to unilaterally apply actual cash value ACV when the policy is written on an agreed value basis. This fails to honor the contractual agreement and can lead to the insured receiving less than they anticipated and are contractually entitled to, potentially causing financial hardship and damaging the insurer's reputation. This also contravenes regulatory expectations for insurers to act in good faith and honor their policy terms. Another incorrect approach would be to use a depreciated replacement cost without considering the policy's valuation method. Replacement cost, even depreciated, is a different valuation concept than ACV or agreed value and may not accurately reflect the aircraft's market value or the agreed-upon value. Applying this without proper justification or policy basis is a deviation from established valuation principles and contractual terms. Finally, an incorrect approach would be to base the valuation solely on the insured's subjective assessment of the aircraft's value, without reference to the policy's agreed value or objective market data. This introduces an element of bias and lacks the objective basis required for insurance settlements, potentially leading to overpayment or underpayment and violating principles of sound underwriting and claims handling. The professional decision-making process for similar situations should begin with a thorough review of the insurance policy to identify the specific valuation method stipulated. If the policy is on an agreed value basis, that value should be the primary basis for settlement. If the policy is on an actual cash value basis, the AIP must then determine the aircraft's fair market value immediately prior to the loss, considering all relevant factors such as age, condition, market demand, and comparable sales, while adhering to any specific guidelines or regulations governing ACV calculations within the relevant jurisdiction. Transparency with the insured regarding the chosen valuation method and its implications is also crucial. Question 18. Investigation of the fundamental definition of risk in aviation insurance requires an underwriter to distinguish between the underlying exposure to potential loss and the specific events that trigger an insurance payout. Which of the following best encapsulates the definition of risk as understood within the regulatory framework for aviation insurance professionals? Option A. The immediate cause of an aircraft accident, such as pilot error or a specific mechanical failure. Option B. The potential for financial loss or damage arising from uncertain future events related to aviation operations. Option C. The total financial cost incurred by the insurer following an aircraft incident. Option D. The certainty that a particular loss event will occur during the policy period. The correct answer is B. The potential for financial loss or damage arising from uncertain future events related to aviation operations. Explanation. This scenario is professionally challenging because it requires an aviation insurance professional to accurately define and categorize risk in a way that aligns with regulatory expectations and the practicalities of underwriting. Misinterpreting the definition of risk can lead to incorrect policy terms, inadequate pricing, and potential regulatory noncompliance. Careful judgment is required to distinguish between the inherent nature of risk and the specific events that trigger an insurance claim. The correct approach involves understanding risk as the potential for loss or damage arising from an uncertain event. This aligns with the fundamental principles of insurance and regulatory frameworks that govern the industry. Specifically, in the context of aviation insurance, risk encompasses the inherent dangers associated with flight operations, aircraft manufacturing, and related activities. It is the underlying exposure to peril that the insurance policy is designed to cover. This understanding is crucial for accurate risk assessment, premium calculation, and the development of appropriate policy wordings that clearly define what is insured. An incorrect approach that focuses solely on the immediate cause of an aircraft incident, such as pilot error or mechanical failure, fails to grasp the broader concept of risk. While these are the proximate causes of a loss, they are manifestations of underlying risks that should have been assessed and priced. Regulatory frameworks emphasize the importance of identifying and managing these underlying risks. Focusing only on the event itself neglects the proactive risk management and underwriting responsibilities of an insurance professional. Another incorrect approach that defines risk as the certainty of a loss occurring misunderstands the core principle of insurance, which is to provide financial protection against uncertain future events. Insurance is not designed for situations where loss is guaranteed. Regulatory bodies expect insurance professionals to operate within the framework of uncertainty and probability. Finally, an approach that defines risk as the financial cost of an insurance claim misinterprets the relationship between risk and claims. The financial cost of a claim is the outcome of a loss event, not the risk itself. Risk is the potential for that loss to occur. Regulatory guidance stresses the distinction between the exposure to potential loss risk and the actual financial impact of that loss, claim cost. Professionals should approach such situations by first consulting the relevant regulatory definitions and industry best practices for risk. They must then apply these definitions to the specific context of aviation insurance, differentiating between the inherent exposures, the potential for loss, and the actual events that lead to claims. This systematic approach ensures accurate risk assessment, compliant underwriting, and effective management of the insurance portfolio. Question 19. Strategic planning requires an aviation insurance professional to advise a client airline on cost-saving measures. The airline proposes significantly reducing its scheduled maintenance program to free up capital for other investments. Which risk management technique should the professional advocate for to ensure both the airline's financial health and operational safety, while adhering to aviation insurance principles? Option A, risk reduction. Option B, risk retention. Option C, risk avoidance. Option D, risk transfer. The correct answer is A, risk reduction. Explanation. This scenario is professionally challenging because it requires an aviation insurance professional to balance the immediate financial pressures of a client with the long-term safety and operational integrity of an airline. The client's desire to cut costs by reducing essential maintenance directly impacts the risk profile of the insured aircraft, creating a conflict between client satisfaction and the insurer's fiduciary duty to manage risk effectively. Careful judgment is required to ensure that cost-saving measures do not compromise safety standards, which are heavily regulated. The correct approach involves risk reduction. This strategy focuses on implementing measures to decrease the likelihood or impact of potential losses. In this context, it means advising the client on maintaining robust maintenance schedules and investing in preventative measures, even if they incur upfront costs. This aligns with regulatory frameworks that mandate stringent safety standards for aviation operations. Ethically, an aviation insurance professional has a responsibility to uphold these standards and protect not only the insurer's interests, but also public safety. Regulatory bodies like the Civil Aviation Authority, CAA in the UK, or the Federal Aviation Administration, FAA in the US, impose strict maintenance requirements, and advising against these would be a direct contravention of these principles. Advising the client to defer essential maintenance to reduce immediate expenditure represents a failure in risk management and a potential ethical breach. This approach, while seemingly cost-saving in the short term, significantly increases the likelihood of mechanical failures, leading to potentially catastrophic accidents. This directly violates the principle of risk reduction and could expose the insurer to substantial claims, while also jeopardizing lives and the airline's operational license. Suggesting the client to simply increase their insurance coverage to compensate for reduced maintenance is an example of risk transfer without addressing the underlying risk. While insurance transfers financial consequences, it does not mitigate the actual danger. This approach is flawed because it fails to address the root cause of the increased risk and could be seen as facilitating unsafe practices, which is contrary to the spirit of aviation insurance and regulatory oversight. Advocating for the client to absorb the potential costs of minor incident without adjusting premiums or maintenance is an example of risk retention. While some level of risk retention is common, in this scenario, the proposed reduction in maintenance fundamentally alters the risk profile. Simply retaining the risk without a corresponding adjustment in operational safety or premium would be irresponsible and could lead to unmanageable financial exposure for both the client and the insurer if a significant incident occurs due to the deferred maintenance. A professional decision-making process in such situations should involve a thorough risk assessment, considering the client's operational context, the specific aircraft, and the applicable regulatory requirements. The insurance professional must then clearly communicate the risks associated with any proposed cost-saving measures, emphasizing the importance of risk reduction strategies that align with safety regulation. If a client insists on a course of action that compromises safety, the professional must be prepared to explain the potential consequences, including increased premiums, policy limitations, or even the refusal of coverage, in line with their ethical and regulatory obligations. Question 20. The risk matrix shows a potential for damage to an insured aircraft while it is stationary on the tarmac awaiting departure. The policy contains a standard hull coverage section, a general exclusion for ground risk, and a specific endorsement that states, notwithstanding the exclusion for ground risk, coverage is provided for damage occurring while the aircraft is being taxied under its own power. How should an aviation insurance professional advise the insured regarding coverage for damage sustained when the aircraft's engines were running and it was being moved by its own power on the tarmac, but not actively taxiing for departure? Option A. Advise that the damage is likely covered because the endorsement specifically provides coverage for damage occurring while the aircraft is being taxied under its own power, and the scenario falls within this broad interpretation. Option B. Advise that the damage is likely not covered because the general exclusion for ground risk is broad, and the endorsement's specific mention of taxied under its own power implies a narrower scope than simply being on the tarmac with engines running. Option C. Advise that the damage is likely not covered because the endorsement only applies to active taxiing for departure, and the scenario described does not meet this specific operational phase. Option D. Advise that the damage is likely covered because the endorsement explicitly modifies the ground risk exclusion, and the aircraft was under its own power on the ground, thus falling within the scope of the modified coverage. The correct answer is A. Advise that the damage is likely covered because the endorsement specifically provides coverage for damage occurring while the aircraft is being taxied under its own power, and the scenario falls within this broad interpretation. Explanation: this scenario is professionally challenging because it requires the aviation insurance professional to interpret complex policy language in the context of evolving operational realities and regulatory expectations, balancing the insurer's contractual obligations with the insured's operational needs. The professional must demonstrate a nuanced understanding of policy structure, specifically the interplay between endorsements, exclusions, and definitions, to provide accurate advice. The correct approach involves meticulously examining the policy wording, paying close attention to the specific endorsement that modifies the hull coverage and the precise definition of ground risk. This requires understanding how endorsements are intended to alter or clarify the main policy terms, and how definitions limit or expand the scope of coverage. By cross-referencing these elements, the professional can accurately determine if the damage falls within the scope of the ground risk exclusion as modified by the endorsement. This aligns with the professional duty to provide accurate and informed advice, upholding the principles of good faith and fair dealing inherent in insurance contracts and regulatory frameworks that emphasize clarity and transparency in policy interpretation. An incorrect approach would be to rely solely on the general exclusion for ground risk without considering the specific endorsement. This fails to acknowledge that endorsements are designed to modify the main policy terms and can override or clarify general provisions. This oversight could lead to misrepresenting coverage to the insured, potentially violating regulatory requirements for fair claims handling and accurate policy explanation. Another incorrect approach would be to interpret the endorsement in isolation, without considering the definition of ground risk, as it applies within the overall policy structure. This can lead to an overly broad or narrow interpretation of coverage, failing to respect the defined terms that govern the policy's application. This demonstrates a lack of thoroughness and an incomplete understanding of how policy components interact, which is a failure in professional due diligence and could contravene regulatory expectations for comprehensive policy analysis. Finally, an incorrect approach would be to assume that the endorsement, by its nature, automatically negates the exclusion without a careful reading of its precise wording and its interaction with the defined terms. This speculative interpretation bypasses the critical step of detailed policy analysis and relies on assumption rather than evidence-based interpretation. This can lead to providing inaccurate advice and potentially exposing the insurer to unintended liabilities or the insured to unexpected coverage gaps, both of which are professionally unacceptable. The professional decision-making process should involve a systematic review of the policy document, starting with the core insuring agreements, then examining definitions, exclusions, and finally, any endorsements. Each component must be analyzed in relation to the others to ascertain the true scope of coverage. When in doubt, seeking clarification from underwriting or legal counsel is a critical step in ensuring accurate interpretation and professional integrity.